Hello, everybody. In the current affairs this week, the week ended 23rd of February 2025. This week, I wanted to talk about an equity benchmark which has given phenomenal returns in last few months. The benchmark which I am referring to is Hang Seng Tech Index. This is a 30-share index constituting top Chinese tech companies. The last 1 week return of this benchmark is 6%. Last 1 month return is 24%. Last 3 months return is 34%. And last 6 months return is a huge 70%. But the interesting part is that the last 3 years return of this benchmark is just 3% CAGR. The reason why the long-term return of this benchmark is so low is, firstly, in last few years, China has got strained relations with the balanced part of the world, and the Chinese tech companies suffered on account of that. And the second reason being the approach of the Chinese government towards its own tech companies. But in last few months, things have changed dramatically. The first and foremost thing is that the Chinese tech companies have demonstrated technological superiority in several areas. Today, the top 10 Chinese tech companies have demonstrated that kind of a superiority which are a challenge to the major tech companies based out of the US. These top 10 companies in China are referred to as Terrific 10, and they have been posing a challenge to the US Magnificent 7, the top 7 tech companies of the US. The second reason why the tech benchmark has appreciated so much is the performance of these top tech companies of China, despite the fact that there have been restrictions on so many of the tech companies of China. And the third and the most important is now the changed approach of the Chinese government with its own tech companies. Chinese president held a one-to-one meeting with all the tech leaders of the major tech companies of China, and this signaled that now the approach of the Chinese government with its own tech companies is going to change very dramatically. This has led to a sharp appreciation in the valuations of the tech companies of China. This is a 40-year effort of the Chinese tech companies in gaining this kind of a superiority. Let us hope that over the years to come, India also follows this kind of path, learning from a country like China who was nowhere before maybe 40 years. As far as the Indian stock markets are concerned, Nifty 50 was down by more than 0.5%, but Nifty mid-cap was up by 1.85%, and Nifty small cap was up by 1.28%. FIIs continued to be sellers by more than 7,000 crores of Indian equity this week, and DIIs continue to be buyers of more than 16,000 worth of Indian equities. The commodity markets, Brent crude, Indian gold and Indian silver were by and large unchanged. The recent discussion which is going on in respect of gold and silver prices is that historically the prices of gold and the prices of silver have moved ahead in a certain ratio all these years. But presently, the prices of gold has appreciated much more than the prices of silver, and the ratio indicates that there would be a catch-up and an appreciation in the prices of silver because silver has not appreciated the way gold has appreciated in last 1 year. As far as the global markets are concerned, Nasdaq was down by more than 2.5% and S&P 500 was down by more than 1.5%. At times when we look at the Indian stock markets, we think, especially in the recent times, that the Indian stock markets are in a softer trend, and that is across all the stocks. But the fact remains that Nifty Small Cap Index, there are stocks which have appreciated by 30% in last 3 months, and there are stocks which have gone down by 60%. And in the Nifty Micro Cap, there are stocks which have appreciated by 56%, and there have been stocks which has gone down by a huge 70%. So the appreciation and depreciation of different stocks have been on the basis of the way the markets perceive the kind of valuations which each of the stocks hold at this point of time. It is not something that the entire stock market is in a bearish tone. That is all for this week. Thank you.